Hello, welcome to Latest Wealth. I am Kailash here, financial advisor as well as wealth coach. My dear friends, in this modules we have been learning about technical analysis. Earlier we discussed little something about basics and charts types in technical analysis. Now let us learn in the charts, getting started with the candlesticks. So what are the candlesticks? How to understand the candlesticks? First, history tends to repeat itself. That is a big assumption. Of course, generally these assumptions works number of times. History repeats once again. As mentioned earlier, one of the key assumptions in technical analysis is that we rely on the fact that the history tends to repeat itself. This is probably one of the most important assumption in technical analysis. It would make sense to explore this assumption in a great detail at this juncture, as candlestick patterns are heavily dependent on it. Assume today, let us take it as an old date, even though it is 2019, I would say let us go back. Assume today date is 7th of July 2014. There are few things happening in particular stock. Let us call this factor 1. Factor 1, the stock has been falling for last 4 consecutive trading sessions. Factor 2, today 7th July 2014 is the 5th session and the stock is falling on relatively lower volumes. Factor 3, the range in which the stock trades today is quite small compared to last 4 days. With these factors are playing in the background, let us assume that on the next day, 8th July 2014, the fall in stock gets arrested and in fact the stock rallies towards a positive close. So, as an outcome of the 3 factors, the stock went up on the 6th day. The time passes and let's say after few months, the same set of factors is observed for 5 consecutive trading sessions. What would you expect for the 6th day? According to that assumption, history tends to repeat itself. However, we need to make an exception and addition to this assumption. When set of factors that has panned out in the past tends to repeat itself in the future, we expect the same outcome to occur as we observed in the past, provided the factors are the same. Therefore, based on this assumption, even this time round, we can expect the stock price to go up on the 6th trading session. Next, let us go into one more topic, the candlestick patterns and what to expect. My dear friends, candlesticks are they are similar structure. The candlesticks are used to identify trading patterns. Patterns in turn help the technical analyst to set up a trade. The patterns are formed by grouping 2 or more candles in a certain sequence. However, sometimes powerful trading signals can be identified by just a single candlestick pattern. Hence, candlesticks can be broken down into single candlestick pattern and multiple candlestick patterns. Now let us go one by one. Under the single candlestick pattern, we are going to learn the following. One is Marubozu. In the Marubozu, once again, there are different types of Marubozu. One is bullish Marubozu, bearish Marubozu, dozy, spinning tops, paper umbrella, in the paper umbrella, hammer, hanging man, shooting star. Now let us go into multiple candlestick patterns. These are combination of multiple candles. Under the multiple candlestick pattern, we are learning the following. One is engulfing pattern. In the engulfing pattern, one is bullish engulfing, second is bearish engulfing. Second is harami. In the harami also, one is bullish harami, second is bearish harami. Next is piercing pattern. Dark cloud cover, morning star and evening star. Of course, you must be wondering what these names means. You might be wondering what is this? As I had mentioned in the previous chapters, some of the patterns retain the original Japanese name. Candlestick patterns help trader develop a complete point of view. Each pattern comes with an inbuilt risk mechanism. Candlesticks gives an insight into both entry and stop loss price. Now let us go into next chapter. Few assumptions specific to candlesticks. Before we jump in and start learning about patterns, there are few more assumptions we need to keep in mind. These assumptions are specific to candlesticks. Do pay a lot of attention to these assumptions, my friends, very important, as we'll keep referring back to these assumptions quite often. Number of times I'll be repeating same thing. Don't get bored, because it is not a movie, it is not an entertainment show. So watch it carefully. At this stage, these assumptions may not be very clear to you. I will explain them in a great detail as and when we proceed. However, keep these assumptions in back of your mind. 1. Buy strength and sell weakness. Buy strength and sell weakness. Strength is represented by a bullish candle. Here we are using blue color. And weakness by a bearish. Here we are using red candle. Hence, whenever you are buying ensure it is a blue candle and day. When you are selling, ensure it is red candle day. Next, be flexible with the patterns. Quantify and verify. While the textbook definition of a pattern could state a certain criteria, there could be minor variations to the pattern owing to market conditions. So one needs to be a bit flexible. However, one needs to be flexible within the limits, and hence it is required always quantify the flexibility. Next, look for prior trend. If you are looking at a bullish pattern, the prior trend should be bearish. And likewise, if you are looking for a bearish pattern, the prior trend should be bullish. Of course, in next class, we'll begin with single candlestick patterns, and gradually in different classes we are going to learn a lot of other things. Now let us see what we learned. Let us start doing the revision. Here we learned that one is history tends to repeat itself. We modify the assumption by adding the factor angle. 2. Candlestick pattern can be broken down into single and multiple stick patterns. 3. There are 3 important assumptions specific to candlestick patterns. The 3 important assumptions are: 1 is buy strength and sell weakness. 2. Be flexible, quantify and verify. 3. Look for prior trend. My dear friends, hope you learned. In next class we are going to deal in detail. Please, we are going by step. Don't be in a hurry. Watch step by step. Watch entire episode. If you are unable to follow, watch once again with more concentration, so that gradually you are moving. Please remember, more you enjoy the process, more the results you are going to get. So enjoy the process, enjoy the life, be wealthy. Let's meet in next class. Till we meet again, enjoy every bit of life. Thank you very much. Bye bye.